we are here to discuss about the book, but just not about the book, in the larger context of what's going on in the Indian economy. So we'll hopefully touch upon a variety of issues. Just for the sake of the audience, some of you would have perhaps seen excerpts of the book, looked at Karan Thapar's interview and so on, so picked up various bits about the book, the more controversial sort of highlighted issues. But let me just give a brief overview to set the context. So basically this book is about the 5 turbulent years that Mr. Subbarao had at the helm of the RBI as its governor. And of course, he discusses in vivid and candid detail, I would say, regarding the various crises he faced, starting with the global financial crisis immediately after he took over, and then the stubborn inflation that India saw, and then of course the management of the rupee, the exchange rate volatility towards the end of his tenure. And against that backdrop, he's highlighted a large number of issues, the issue of RBI autonomy and mandate, its regulatory, institutional, and other functional autonomy. So there are lots of interesting anecdotes and things, and which I'm sure you all would have heard about through the media. But he's also talked about many less highlighted issues, I would say, so far in the media. For instance, regulation of the non-banking financial sector, and what is the role of the RBI in that regard. He's talked about the spillovers of monetary policy and actions across countries in an increasingly integrated economy. And the sort of responsibility that central bank governors need to have, the sensitivity they need to have regarding the effects, and so the need for policy coordination across economies. He's also talked about, obviously, the kind of appointment issues of key functionaries in the government. And so, it's really quite a wide canvas that we have in this book, and I really enjoyed reading the book, I must say. It was, 300 whatever pages went by pretty fast. So this is a brief sort of context of the book. So it's not just about, whether the RBI's autonomy was undermined and what happened with a particular finance minister and so on. I would like to look beyond all those issues. Of course, they remain very important topical issues in terms of the efficacy of an important institution such as the RBI, but also look at, emerging issues such as, for instance, inflation targeting, for instance, how India, for instance, the RBI bought 200 tons of gold and what impact it had. We would like to also discuss about the implications of recent events such as Brexit. So I would like to kind of open up the entire range of things that we'd be discussing here against the backdrop of this book, and not to just limit ourselves to the remit of the book. So let me just start with that introduction by asking Mr. Subbarao regarding what motivated him to write this book, and what are the key messages, or maybe key message, he would like to convey from this book?
Sri Chidambaram, former finance minister, an honorable member of parliament, and all of you are gathered here to listen to us about this book. Professor Chanda said that I should talk about the motivations for writing the book rather than the content of the book, because the content we're going to talk about as part of the panel discussion. There were 3 motivations that drove me to write the book. The first was to communicate the challenges that I confronted as governor in the context of the macroeconomic situation that I had to handle. The second motivation was to demystify the Reserve Bank. And the third motivation was to communicate the dilemmas in public policy making. I gather many of you are students of public policy, and I wanted to use the backdrop of the Reserve Bank to communicate those dilemmas. I want to address briefly each of these 3 areas. First, on challenges as governor, I took office on the 5th of September 2008. On 16th of September, Lehman Brothers collapsed, plunging the global financial sector into a near-death experience. We had a big crisis, a complex crisis, a devastating crisis, the deepest crisis since the Great Depression. Even experienced governors were bewildered by that crisis, not to speak of a greenhorn like me. Every country, virtually every country in the world was affected by the crisis, so was India. But the story going around in India was that this new governor came and he brought on the crisis. So I played along with that. I took that in my stride. Wherever I went, the question to me was, "Sir, when is the crisis going to be over?" As if I knew. But I used to say, "So since you people said that I brought on the crisis will end when my term is over." And I used to tell them when my term would over. But lo and behold, here's the thing. In the week after I left the Reserve Bank, the economy got back on track, the rupee stabilized, inflation got on a downward trend, growth got on an upward trend. So it is one prophecy on which I wish I had been wrong. It was this, but that's not to be my legacy. But coming back to the crisis, it was a very frightening time around the world. It was a frightening time for us in India. Mr. Chidambaram was the finance minister at that time. There were many challenges I wrote about in the book, but one challenge I want to mention is that I had very low credibility when I went in as the governor. I was finance secretary, and within 24 hours, I moved from Delhi to Mumbai to become the governor. My predecessor, Governor Reddy, had established a very formidable reputation for preserving the autonomy of the Reserve Bank. So the story that went around was that the government was sending me into the Reserve Bank to do the government's bidding from within the Reserve Bank. That would have been bad enough at any time, but it was very damaging in a crisis time. But that was not all. As part of the crisis management, we had to work very closely with the government. So everybody in the financial markets, everyone in the Reserve Bank saw me working very closely with the government, which in a way reinforced this view that this man has been sent from the government as an agent of the government. Agent is a wrong word, but as somebody to compromise the Reserve Bank's autonomy and do the government's bidding. But you can't go around wearing a T-shirt that I'm going to preserve the Reserve Bank's autonomy. You're not going to say that in a speech or in a media comment. That had to take time to establish my credentials, establish my reputation as somebody who would stand up for the autonomy of the Reserve Bank. That was a very big challenge for me during the crisis. But as Professor Chanda said, we had one crisis after another. I want to give another example about managing this tension between growth and inflation, which is a perennial challenge for central banks. It is not just me, it's not just the Reserve Bank, it's not just India. Managing this tension between growth and inflation is a challenge for all countries, all central banks, for all times. Because to support growth, you need to maintain a soft interest rate regime. On the other hand, to rein in inflation and maintain price stability, you have to maintain a tight interest rate regime. I'm somewhat oversimplifying the problem, but that's the way it is. So with one interest rate, how do you meet these two different conflicting objectives? In 2009, we were celebrating the Platinum Jubilee of the Reserve Bank. Many events around the country at that time. I recall distinctly one event. We had a town hall meeting in Chennai. I think this was a week before, early January, a week before Pongal. Chennai was in a festive mood, so were we in the Reserve Bank. It was a town hall meeting on the steps of the Egmore Museum around 7 p.m. There were about 400 people, literally taken off the street. Middle-class people, low-middle-class people, students, youngsters, middle-aged people, etc. And they were the predictable questions. It was a nationally televised show. There were predictable questions about loans, deposit rates, service in banks, NBFCs, chit funds, etc. But about half an hour into the show, I took an audience poll. I said, how many of you would want the Reserve Bank to prioritize growth over inflation? About half the hands went up. And next I asked, how many of you want the Reserve Bank to prioritize inflation over growth? Another, about half the hands went up. And that was roughly half and half. But suddenly, as I was thinking on my feet, some visual impression I had was that the people who prioritized inflation over growth were the middle-class people, middle-aged people, married people, okay, who had a family to run. Their main concern was inflation. Whereas students, youngsters, they prioritized growth over inflation because their concern was jobs, their concern was career. They were looking for a longer term. So this is the type of challenge in real terms that the Reserve Bank has to handle. The second motivation, as I said, was to demystify the Reserve Bank. I wanted to demystify the Reserve Bank because the popular impression is that the Reserve Bank is a currency printing office and that the governor, all he does is sign the currency. You know, when I used to go to schools, the children used to say, "Sir, are you slow in signing? That's why you're not having enough money." But even some of the older children would ask, quite innocently, "Why didn't you print more currency? Because then India can be a rich country." Explaining to them that printing a currency is not a way to get rich is a very difficult question. In any case, there is a lot that the Reserve Bank does which has a connection with people's everyday lives. The prices you pay in the market, the interest that you get if you make a deposit in a bank, how much foreign exchange you can take when you travel outside the country, and many of you are students here, student loans, what rate of interest, whether you get an education loan at all, and what interest is charged on the education loan. All of these are in some sense connected with what the Reserve Bank does, and I thought that people should see that link between their everyday lives and what the Reserve Bank does. But there was another deeper motivation for my wanting to demystify the Reserve Bank, which is that over 40 years as a civil servant and as the governor, I realized that there's a negative stereotype about the Reserve Bank, that it's a very rigid institution, unbending, far removed from the realities of India, just in their own narrow tunnel they work, etc. When I was sub-collector Parvatipuram, that was my first posting about 40 years ago. That was North Coastal Andhra Pradesh, in Srikakulam district. That was, I'm talking about mid-70s, and there was Naxalite influence there, extremist influence there. In fact, Srikakulam district of Andhra Pradesh was the first region outside of Naxalbari to come under extremist influence. By the time I had gone there, of course, the extremist movement was on the wane, and our main priority at that time was to improve the livelihood of tribals who would come under the influence of the extremist movement. So my job content and one of the priorities for me was to get loans from banks for tribals. So I used to go from one bank branch to another. There were not very many branches at that time, especially in tribal areas. I used to go from one bank to another and canvass proposals of tribals. And bank managers would come up with a variety of excuses why they cannot give more loans. But when all else fails, they say, no, Reserve Bank rules do not permit this. Okay, that becomes the Brahmastra to deny a loan. During the Naxalite movement, actually, enemy number one was the forest guard. Enemy number two was the policeman. Enemy number three was possibly the Reserve Bank. One MLA had actually campaigned saying that he will fight for abandonment of the Reserve Bank were he to be elected. So that was the amount of anger that was there against the Reserve Bank, partly because of misunderstanding. So I wanted to correct for all that. The third motivation, as I said, for writing the book was to communicate some of the public policy issues, because there's no black and white in public policy. It's always gray. You've got to make a judgment. The best, typically, most of the time, has to be the enemy of the good. Let me give an example. 6 years ago, there was this microfinance blowout in Andhra Pradesh. And to distill a very complex issue, the complaint against microfinance institutions was, first, that they were charging usurious rates of interest. Second, that the the recovery practices were very tough and, difficult. And third, that microfinance institutions were loading poor families with one loan after another, and also making exorbitant profits at the expense of the poor. That was a distilled version of the anguish, anger, agitation against the microfinance institutions. We in the Reserve Bank had appointed a committee under Mr. Maligam, and this committee made several recommendations, but the most important recommendation was to cap the interest rate that microfinance institutions can charge. That was a very difficult decision. You know, if you think about it, it looks very straightforward. You know, they're charging usurious rates of interest. The solution is cap the interest rate. Why it was difficult was that, you know, many of you are young, but some of the older people will remember that before the reforms of 1991, the Reserve Bank used to regulate every interest rate in the country, in the economy. What deposit rates for 7 years, 10 years, 1 year, what interest rate to be charged on what type of loan, etc., everything. Over 20 years, we had dismantled that administered interest rate regime. The last administered interest rate regime remaining was the interest rate on the savings bank deposit. That was dismantled during my term, and it was hailed as a historic decision. A lot of people said that that will be my lasting legacy. But within 3 months of that, I was called upon to make a decision on whether we must impose an interest rate ceiling on what the microfinance institutions can charge. My concern, my worry, was not so much about my legacy, but whether this will become the thin end of a wedge to reintroduce administered interest rates. So what I'm trying to communicate to you is that there is no black and white in public policy issues. Today you're talking about GST. You know, I don't want to go on and length about GST, but what everybody knows that the GST that we're going to have is less than the textbook practice of what you learn in a textbook. But that's the reality, because you can't implement textbook models in real life. You got to adapt them to our practical situation. So I spoke about the 3 motivations for writing the book. I also spoke about the differences between the government and the Reserve Bank. I want to clarify that, as Professor Sriram said, that's a very small part of my book. Yes, there were differences. Those differences arose because of different perspectives. It is not my intention to be holier than thou. It is not my intention to pass a value judgment. It is not my intention to say that one side was right or the other side was wrong. What I wanted to communicate was that when you make public policy, these differences are there. They're not unique to us. They're across countries, you see those differences. And those differences are handled in different ways in different countries. Finally, I want to thank Sri Chidambaram for many things. He was the finance minister when I was finance secretary. He was finance minister for much of the time I was governor. He was the finance minister who made my first appointment as governor. He's been gracious enough to travel all the way from Delhi to come for this event. Most importantly, I want to thank him for the endorsement that he gave for the book. I also want to correct a misimpression. Part of the media have quoted me as having said that he gave the endorsement even without reading the book. That is completely wrong. He gave the endorsement only after fully reading the draft of the book. What I was grateful to him on what I had said, or I thought I had said in the media, was that he'd agreed to give the endorsement even before seeing the content and the tone of the book. So that's why I said it's been very magnanimous. Thank you very much, sir. Finally, I want to thank IIM, Professor Sriram, Professor Rupa Chanda, Professor Srinivasan, all the staff and students for having us over here. Thank you very much.
Could you please share your reflections on this book, and in particular the tension that's been constantly highlighted regarding, you know, the differences in views on not just monetary policy, in some other aspects also, like for instance exchange rate management between the RBI and the government and the finance minister?
Thank you for asking me to share the stage with Dr. Subbarao. and to speak about the book. In the course of this conversation, of course, we will touch upon other subjects, but let's remember that the occasion is the book, and therefore we should spend some time discussing issues which have been examined at great length in the book. Dr. Subbarao was with the Economic Advisory Council when we picked him for Secretary, Department of Economic Affairs, and then he became the Finance Secretary. After some time, when the post of Governor, RBI fell vacant, was about to fall vacant, we picked him for the post of Governor. Both the Prime Minister, Dr. Manmohan Singh, and I are proud to have made excellent choices as Governor from time to time. Speaking for myself, I had the privilege to choose Dr. Bimal Jalan. I had the privilege of appointing Dr. Y.V. Reddy as the Deputy Governor of the RBI, knowing fully well that one day he will become Governor. I had the privilege of appointing Dr. Subbarao as Governor, and I had the privilege of appointing Dr. Raghuram Rajan as Governor. All of them have served the institution and the country with great distinction. A famous judge once said, a British judge, two reasonable men can hold diametrically opposite views without forfeiting the right to be called reasonable. When thinking, intelligent men and women hold important offices, it's naive to expect that they will agree on everything. If two people agree on everything, I think one of them is stupid. And especially at the level of policy making for the country, there are bound to be different opinions, different shades of opinion. What Dr. Subbarao has said in this book is a point of view. A point of view that deserves to be respected, deserves to be valued, deserves to be debated. But it is still a point of view. There are other points of view. And people who hold different points of view are not necessarily wrong. They just happen to hold a different point of view for valid reasons. There are a number of examples in the book of different points of view. Let me highlight one. The jury is still out. My government appointed the Financial Sector Legislative Reforms Commission under one of the most distinguished judges of this country, Justice Sri Krishna. It was a blue ribbon panel. It has made some very, very important recommendations. In fact, just as VAT was transformational, just as GST will be transformational, if the recommendations of the FSLRC are implemented, that would be a transformational change in the way we run our economy. Now, Dr. Subbarao, in his book, disagrees with many of those recommendations. In fact, he goes to the extent of saying that the Commission exceeded its mandate. It was only a Financial Sector Legislative Reforms Commission and not a Financial Sector Reforms Commission. Now, I have a different view. In fact, I've urged this government that they should implement the legislative and the non-legislative recommendations of the FSLRC as early as possible. The FSLRC recommendations follow the first report of the Percy Mistry Committee, the second report of the Raghuram Rajan Committee, and then takes the story forward by recommending sweeping changes in the way we regulate our financial sector. Now, who's right and who's wrong? It's for the people of India to judge. But two people can hold diametrically opposite views, and I believe neither of us has forfeited our right to be called reasonable human beings. As Dr. Subbarao said, policy making is never black or white. In fact, the choice is never between A or B. The choices are not binary choices. It's not a quiz paper where you mark the S box or the no box. Policy making is a very nuanced exercise. Sometimes you find an argument to say yes, very compelling. Sometimes you find an argument to say no, very compelling. And you may end up saying what people may understand as yes or may understand as no. In fact, the most famous and longest serving chairman of the US Federal Reserve, Greenspan, once said, gentlemen, if you're nodding your head, if you think that you have understood what I said, then I must have misspoke. There were many, many occasions when you could go this way or that way. When Lehman Brothers collapsed, Dr. Subbarao was 11 days into the job. The secretary, finance secretary, was, I think, 2 or 3 days into the job. The secretary of the Department of Economic Affairs had joined the previous day. And therefore, the magnitude of the crisis was not known to anyone. In fact, several weeks after the crisis, when I was having lunch with Secretary Paulson of the US, the Secretary of Treasury, he stubbornly maintained it was not a solvency crisis, it was only a liquidity crisis. Weeks after the collapse of Lehman Brothers. And therefore, we took a number of decisions. In many decisions, there was complete agreement. In many decisions, there was partial agreement. In some decisions, we disagreed. One of the decisions on which there was serious disagreement between the RBI stroke governor and the government stroke finance minister was in the appointment of a liquidity assessment committee. Dr. Subbarao mentions it in his book. He says he felt that the government had encroached into the jurisdiction of the RBI. Therefore, he was right when he said the RBI will not appoint its representative on the committee. But there is another point of view that has been articulated by other people, and the other point of view is that the RBI's reach was only to regulated entities, and there were a number of non-regulated entities which also face the liquidity problem. RBI regulates banks. RBI regulates a fraction of the NBFCs of this country. A large number of NBFCs are not regulated by the RBI. A large number of other financial or quasi-financial bodies are not regulated by RBI. They face liquidity crisis too. Therefore, the government felt, and I believe rightly, that the ultimate assessment of the liquidity situation must be made by the government, and everybody must pitch in and lend a helping hand. Now, who was right? Who was wrong? At that point of time, it would have been very difficult to say. But I believe we were right, because when banks were falling like 9 pins in the world's wealthiest country, throughout that crisis and thereafter, not one bank, not one mutual fund, not one NBFC, not one regulated entity, not one non-regulated entity failed in India. Banks collapsed in the US, banks collapsed in the UK, banks collapsed in France, banks collapsed in Spain, banks collapsed in Germany. Not one financial institution collapsed in India. I still think we are too close to the event to make a final assessment. It will be made by economic historians and economists, maybe after a few years. I'm just giving this as an example. I entirely agree with Dr. Subbarao that policy making is an art and a craft at the same time. It's no longer possible for anyone who's unfamiliar with the subject or anyone who refuses to become familiar with the subject to hold portfolios like finance or commerce or power or telecommunication. It's no longer possible. The world has become so interdependent. The issues have become so complex. Technology is far ahead of what average people can comprehend, that unless you're fully familiar with the subject or willing to familiarize yourself with the subject, willing to listen to a large number of people who are experts, it's no longer possible to handle policy at these levels. And that is why it's important that there should be far greater emphasis on policy making, policy issues. Our debates that take place through the print and through the channels is so superficial. That is, if you can make out anything of what anyone is saying. But at least in our academic institutions, we must understand that policy making has become extremely complex. Ultimately, I hold the view that the buck stops at the government's table. Each regulator, of course, can carve out an area of jurisdiction. But ultimately, the buck stops at the table. People are not going to ask the Reserve Bank of India or the Securities and Exchange Board of India or the Insurance Regulatory Authority of India why something happened, why a collapse happened. Ultimately, that question will be put to the government of the day. That is the strength and that is the responsibility of running a democracy. In a crisis, I believe everybody should pitch in. In a crisis, there is no such thing as this is my jurisdiction, that is your jurisdiction. And don't enter upon my territory. In a crisis, I believe ultimately everybody must finally, after everybody's had a say, everybody's had a role in making the decision, must defer to government. I believe that it's possible to do so. For example, I have presented 8 or 9 budgets. Dr. Subbarao will bear me out when I say that. Every budget that I presented, although it's supposed to be a secret document, I have always shown the relevant portions of the budget pertaining to financial management and the RBI and monetary policy and other issues to the governor a few days ahead of the budget. Because I think it's important to carry that institution with you. Likewise, when the budget dealt with capital market, I made it a point to call the SEBI chairman and share the budget speech with him, at least those paragraphs. But ultimately, it's the government which has to bear the burden of explaining why it did and why what it did succeeded or why what it did failed. You may say that you say so because you speak from the advantage of being a former finance minister. If you were a former governor, you will never say that. Well, I have no easy answers to that. All I can say is it's near impossible that I will ever become governor of RBI. But it's quite possible that Dr. Subbarao can become finance minister of India. If he does, and when he does, I'm sure he'll endorse what I'm saying. Ultimately, the buck stops at the government's table. I think I'll stop here so that Professor Chanda can continue the proceedings.
Thank you very much for such a nice, elaborate, sort of detailed explanation of the turf between the government and the RBI, and that the buck stops finally with the government. I wanted to turn back to the book on the crisis management that you faced, the 3 different crises, and would request you to just explain to the audience, what you felt was the most difficult of these 3 crises, which gave you the toughest challenge, and why. And maybe you could also highlight where you got the maximum support from the government in tackling the challenge.
No, thank you for that question. It's where it covers a very wide canvas, but I'll try to be as brief as possible. As we've already covered, I started with the global financial crisis that went from 2008 to 2009. And then even as we were still recovering from the crisis, inflation caught up with us. We recovered from the crisis sooner than most other countries, indeed sooner than most other emerging economies as well, but we had very high, persistent, stubborn inflation. Not only did we have inflation, but we had moderating growth. So that's a very toxic combination of declining growth and increasing inflation. And that segued somewhat into an exchange rate pressure in the last year of my tenure as a consequence of the taper tantrums. All of them were very complex challenges, very compelling challenges. But I think by far the most difficult to manage was the exchange rate challenge in the last year. And the reason is this, that when you're trying to manage the crisis, global financial crisis, I found that I had enough time to reflect, to think through, to listen to all the analysis that's been given to me, to consult people that I wanted to, and make a choice. It was a difficult time, it was a frightening time, but certainly there was sufficient time to make a considered, deliberate choice. On inflation management too, it's not something that you can bring down overnight. So there's, by definition, time when you're trying to calibrate inflation or monetary policy in order to restrain inflation. But exchange rate is an altogether different issue because it's an issue of the here and now. You are working in the office and you see the exchange rate moving, going through a sharp volatility. In fact, I write in the book about how the exchange rate went, moved over 5 to 6% in a matter of half a day, which is a very frightening, compelling challenge. The second reason I say the exchange rate crisis was a difficult one is because everything that a central bank does, everything that the Reserve Bank does, the effectiveness of those policies depends on how markets react, how people react. It's a question of managing expectations. Managing expectations is difficult on inflation. Managing expectations during crisis time was different. But managing expectations on rupee is particularly more difficult because exchange rate movements are oftentimes driven by irrational fear and the self-fulfilling prophecies of some other speculators. So that are the most difficult challenge. And finally, to your last question, I should say that I had equally positive support from the government in managing all the crises, and there was also an equal share of differences of view and disagreements on each of these challenges.
Thank you very much for reflecting on the three crises. But now if I turn to Mr. Chidambaram and ask him, in your opinion, how well was the RBI able to manage all the three crises? And reflecting back, because one of the things you keep mentioning in the book is about the real-time sort of thing. You don't have the benefit of hindsight, right? You just have to act on the spot. You don't have very good data, and you have to somehow make certain judgments. These are discretionary calls. So looking back now, so I'm asking both of you actually. If you look back now, were there judgment calls that were perhaps not correct? Were all the crises really managed effectively, in your view?
Which ones do you want to talk about?
Well, all three, I mean. So you pick any of the crises, because this was really a very interesting period, I must say.
In terms of the dimension of the crisis, the magnitude of the crisis, and its consequences, I think the 2008 crisis was clearly the most severe crisis. It was a crisis that touched sectors that were beyond the reach of the RBI. That's something which most people don't quite understand. It involved areas where the SEBI had jurisdiction. It involved mutual funds, which are regulated by more than one body. It involved, as I said, non-regulated NBFCs, and it involved the whole economy. Ultimately, it involved the common man, because he was asking the question, is my deposit safe? I don't know how many of you recall that there was a run on ICICI, India's largest private sector bank, considered the most innovative, most aggressive bank in the country. Chanda Kochar, then joint managing director, went to the media and on October 10 and tried to reassure depositors and the public, but it didn't calm nerves, it didn't calm the public. It was a weekend. Government intervened. I called Mr. Kamath and we had a conversation and I said, you have to do these things now. Mr. Kamath went on television and put his hand on his heart and said, I assure all of you, your money is safe. Then within minutes, I followed him and made a statement, yes, every depositor's money is safe. Imagine if ICICI had collapsed. Like other banks, much bigger banks had collapsed. But Lehman Brothers is several hundred times the size of ICICI. It collapsed. And before that, Merrill Lynch collapsed. Wells Fargo collapsed. Freddie Mac and Fannie Mae were taken over by government. All this happened in a space of 7 days. Now, where is the time to think? Where is the time to quarrel? You have to act. I think in terms of dimension, magnitude, and consequences, the 2008 crisis was clearly the crisis of the century. I hope there's not one before the end of this century. That's why it's called the Great Recession, after the Great Depression of the 1930s. Exchange rate is not something which concerns the common man. Yes, it affects prices of imports. It helps exporters, it hurts importers, etc., etc. But the vast majority of the people of the country are not concerned about the exchange rate. A vast majority don't consume imported goods. Vast majority don't travel abroad. Vast majority don't buy and sell foreign exchange every day. But it affects the balance sheet of the government. It affects the balance sheet of companies. It affects the balance sheet of banks. And I think consistently we have said the RBI should intervene only when there is excess volatility. Exchange rate is a price. Like the price of any other good or commodity, exchange rate is a price. And that price will go up or go down depending upon supply and demand. And that supply and demand will be affected by how much trade we do, how much trade comes in, how much trade goes out, and how much is your inflation. It's important that the exchange rate remains relatively stable. It's important from government's point of view, banks' point of view, companies and firms' point of view, but it doesn't have the kind of catastrophic consequences like collapse of financial institutions. And what's the third one? No, what was the third crisis? Yeah, you see, we had inflation was coming under control when the taper tantrum occurred. A thoughtless remark by Mr. Ben Bernanke of something that he might do several months later, and he never did it before he stepped down. The first pullback from quantitative easing was done by his successor, not by him. A completely thoughtless, premature remark made several months before the event happened sent a tremor across the world. And that affected our currency. Anyway, it set us back in the path of recovery by a few months, but we did begin to recover again. On inflation, you can have as many views as there are men and women in a room. How can you agree upon how inflation is handled? I think, and I was not the finance minister at that time, I had been moved to the Home Ministry. And the town hall meeting that Dr. Subbarao was talking about was not even on my radar, because beginning 1st December 2008, we were battling the aftermath of the Mumbai terror attack. While I was battling the aftermath of the Mumbai terror attack, Dr. Subbarao had the luxury of addressing a town hall on the steps of Egmore Stadium. So I think we were occupying different worlds. But even from the other side of North Block, Home Ministry, it became clear to me at that time that the response to the 2008 crisis, the 3 stimulus packages, and the failure to withdraw the stimulus packages had sent the Indian economy on a wild goose chase. Inflation was bound to happen when we breached fiscal deficit, when we allowed the current account deficit to go out of control. I think that was quite plain to anyone who's even partly informed about how these things affect the economy. And therefore, learned economists ought to have known that when the fiscal deficit breached 5%, 6%, 6.5%, when the current account deficit was going into $60, $70 billion a year, there's no way in which inflation could be controlled. But we failed to take the steps to control inflation, which is why inflation went into double digits. Then, as I said, you can only sit and watch from the other side of North Block. You can't do much about it. We paid, of course, a political price for that. We began to rein in inflation only beginning May 2013 or so. The taper tantrum set us back by a few months, but again we regained control. And contrary to what newspapers say and what the ruling party says, inflation began to come down from November 2013. Just go back and look at the numbers. From November 2013, inflation declined, a secular decline in inflation. And by May 2014, inflation had declined. CPI inflation had declined to 6.77%, which is why the statement of the finance minister about 8 or 9 days ago that the UPA bequeathed double-digit inflation was wrong to his knowledge. Yet it is politically attractive to make a statement that UPA bequeathed double-digit inflation. In May 2014, CPI inflation was 6.77%, 6.7%. It is double-digit only if you ignore the decimal.
Thank you. But, picking up on the issue of exchange rate volatility, there are 2 different points of view on that. One is that, the proximate cause was basically the taper tantrum, right? The fact that the Fed was going to raise interest rates at some stage. But were there not underlying structural problems in the Indian economy which triggered off such a massive depreciation of the Indian rupee? Would you agree?
No, I don't agree. If there were massive structural problems, then how did the rupee come back to its old level? It depreciated almost 8 rupees, I think, to a dollar. But it recovered. The 8 rupees we recovered very quickly. Once we managed the situation, once we got over the taper tantrum, we recovered. In fact, we went back to exactly the same point we were on the day before the taper tantrum. So there was no underlying structural problems would have caused the gradual depreciation of the rupee. But the sharp depreciation was entirely attributed to Mr. Ben Bernanke. If he comes here, somebody should ask him to pay up for that statement.
Can you share your views regarding the proximate versus the underlying factors that might have led to the rupee's depreciation?
Yes, I somewhat agree with what Mr. Chidambaram said, but I want to use my own language to agree with him, which is that they were indeed structural problems. We had high fiscal deficit. We had high current account deficit. Everybody was aware of it. He's spoken about fiscal deficit. I'm not talking about one government or one finance minister or one finance secretary. For several years, we built up fiscal deficit. That spilled over into the external sector. If you look back, the 1991 balance of payments crisis was in fact a consequence of the fiscal profligacy of the 1980s. Similarly, the exchange rate pressure we had in May to September 2013 was a consequence of a number of factors, most importantly, the demand in the economy as a consequence of fiscal deficit, which spilled over into current account deficit, and we had current account deficit exceeding 4% year on year for 3 years. And that caused the exchange rate to make an adjustment. My point, as what Mr. Chidambaram said also, is that a significant correction, a massive correction in the exchange rate was inevitable. It was going to happen, it had to happen sometime. The proximate cause was the announcement of taper tantrums, or taper, not tantrums, but the announcement of taper by Chairman Bernanke, which caused a very volatile adjustment of the exchange rate. It moved from, I don't remember the exact numbers, but the correction from May to August, or end August, or first week of September when I left office was about 17%. I don't think it recovered. When I left office, it was about $62, $63. It recovered to 57 or 58, but it did not go back to 55 or 54 or even 45 what it was. So that correction was inevitable. There was some overshoot. It went up to as high as 68, but that was clearly an overshoot where it corrected within hours, but it remained in the range of 58 to 62 and did not correct back because that adjustment was inevitable. Just one minor correction, I don't think it matters, but when Mr. Chidambaram as Home Minister was battling the aftermath of the terror attack, we were in the Reserve Bank battling other crises, including inflation. We were also, the celebration of the Platinum Jubilee was not, the town hall meeting I referred to, was not during the Pongal of 2009, the Pongal of 2010. Thank you.
I think I'll just ask one last question so that the audience has some time to also interact with both of you. Just one issue, which has come up again and again, which is that of communication and perception management. I mean, you mentioned about this sort of statement of doing something in the future which didn't even actually happen under Bernanke, and the kind of panic is set off in the markets. And you also talk repeatedly in your book about the importance of communication, timely and sufficient communication. Now, the question I ask is that, how do you balance communication to the markets? If you have excessive communication, it can trigger off, it can rattle the markets. If you don't communicate enough, then it leads to speculation. So during your tenure, you talk about, having more interactions, trying to explain your actions and so on. How well do you think today the RBI is doing in terms of communicating better its policy actions, the rationale behind them, the conflicts that it faces, and so on? Have things improved?
There's an entire chapter in my book about the communication challenges of the Reserve Bank, communication challenges of the governor. Indeed, there's more than one chapter because I talk about communication issues and communication challenges even in other chapters. I realized in the first few days of becoming governor that what the governor says is very, very important. The market tries to interpret every word, every nuance, every syllable, the body language, etc. of the governor. So I learned that you need to communicate, you need to think through what you're saying, and you also need to think through the message that you're trying to give. And I write about that. One of the things I've realized is that you cannot tell the market how to behave. Oftentimes, the market behavior is completely at variance with what you thought would happen. For example, I'll just give you one example. In July 2013, when we were battling the crisis, Mr. Chidambaram was the finance minister, battling the exchange rate pressure. He was the finance minister, and I had raised the interest rates, both the repo rate and the marginal standing facility rate. It is a very unusual measure because no central bank admits to using interest rate policy to correct for exchange rate. Certainly in the Reserve Bank, we'd never done that. The reason we did that was, first, there was a lot of liquidity in the system, which is encouraging speculation on the rupee. So we had to drastically, abruptly, brutally withdraw liquidity from the system in order to curb speculation. The second motivation, the second reason we did what we thought and everybody thought was an unusual measure was because we wanted to send a signal about the resolve of the Reserve Bank to defend the exchange rate. There was a lot of concern at that time about moderating growth. Actually, the TV channels that night, the newspapers next morning, everybody commented on how this Reserve Bank's tightening of interest rates in defense of the exchange rate will hurt growth. Then when there was a media conference later in that day, and the first question they asked me was, will it not hurt growth? What you've done, will it not hurt growth? Everybody spoke about it. All the media analysts, commentators, everyone. So I thought I had to assuage the market's concern about growth. So I said, yes, we are sensitive to growth concerns, but we've done this measure, we've taken this measure to defend the exchange rate. We will withdraw this measure as soon as the rupee stabilizes. The market reaction to that statement of mine was brutal and swift. The rupee fell by about 5% in 2 hours. Then we started agonizing about why indeed did the market see a different message than the one I wanted to give. And I consulted our staff, and the surmise was, first, that what they wanted to hear from the governor was absolute undivided focus on exchange rate. Notwithstanding the fact that everybody else was speaking about growth, that doesn't matter. The governor should have spoken only about exchange rate, nothing else. And second, they said I was hesitant and apologetic. The reason I said we will withdraw this measure as soon as rupee stabilizes, that was seen as hesitancy and apology about defending, or whatever, not defending the exchange rate, but about defending the measures to correct for the exchange rate volatility. So the point I'm trying to say in response to your question is that it's very difficult to predict market reaction to what you say. Mr. Chidambaram referred to Chairman Bernanke's ill-advised statement. I'm sure Bernanke is agonizing over that. He writes about that in his book, about how he completely misestimated, or whatever is the right word, of the market reaction to that. More recently, last year, actually to date, last year, 9th or 11th of August, when the People's Bank of China did a tweaking of their exchange rate, in my view, they made very straight communication. They said we're tweaking the exchange rate so as to make the exchange rate more market related. But rest of the world, the entire financial sector refused to read that plain English for what that plain English is. They saw some motives behind that. And Chairman Governor Jushuvan of the PBOC, I'm sure, was quite perturbed and quite confused about why the market reacted the way it did. So what I'm trying to say is that central bank communication is very difficult. Governors have to be very careful about what they say. But even after being careful and cautious and deliberate and thoughtful, sometimes markets refuse to take the message that they're trying to give.